Welcome everyone back to school, quote unquote, to the first webinar after the summer break. And my name is Leon Tang. I'm the co-host of BioVerse, where science sparks medicines in business. Today is my great pleasure to have such a panel of prestigious and very, very knowledgeable speakers from our community of Hong Kong Stock Exchange, especially biotech space. Actually, before I start, I would like to, remind everyone who we are and also welcome the recurrent audience and also new audience joining us. I would like to share a quick presentation before I introduce our panel. And please let me know, my panelists, give me a thumb up if you can see the screen. Okay. All right, so today we're going to talk about the Hong Kong Stock Exchange, why they are having a biotech boom. And before, like I said, before we get started, let me tell you, especially for the new audience, who we are. BioVerse, where science sparks business in medicines, are actually produced by three nonprofit, US-based nonprofit. The first one is ourselves in Science We Trust Community. We are a registered nonprofit in New Jersey. Little bit about the BioVerse. We have on average over 13,000 live attendee every episode. Today you probably say, oh, there's only less than 50 people. What's going on? Well, we have another 7 to 8 channels to do broadcasting with our aging audience. So all them together, typically it's about 13,000. And we do newsletter. We also have quite a few social platform, media platform. And the second one is probably the oldest, the most established Chinese American focused pharmaceutical nonprofit, Sino-American Pharmaceutical Professional Association with Philly chapter. The last one is our collaborator based on Boston BioSpark, which by the way, going to run their second annual conference in MIT in a few weeks. Before we get started, I also want to remind everyone, the opinions really just a personal opinion from the speaker, does not represent the position of their company. And this is just for your educational purpose. Please do not take them as your investment or other business decisions at the moment. Okay, now let's get into the topic we want to talk about. Before we talk about the Hong Kong Stock Exchange, biotech boom, one thing I think the biggest elephant in the room is really about the ChinaBiotech outbound deals. And this is kind of a little bit outdated data, but still show you the trend. If you look at the chart on the left, which is kind of the first 5 months of China outbound BD deals with the big pharma, especially with those with upfront payment of more than 50%. The percentage I show you in the past, I would say a few years, what's the percentage of China outbound deals compared to the global total. In the first 5 months, as you can see here, it's about 42%. That's quite impressive. And on the right panel, there's two examples I want to name. The first one is Pfizer, put down about $1.25 billion upfront payment to get this, phase 3 ready at the time by specific asset from 3S Bio. That's the largest BD deal by upfront payment. And then just like 2 months later, GSK announced another mega BD deal with the Hengrui. This is by total value is the largest out of China. It's actually 12 billion milestone and excluding 500 million upfront payment. And this is about 12 assets, and the most advanced one is just a phase 1 asset. So because of those, really strong China outbound transactions, that's why a lot of people believe it's driving the current capital market boom in Hong Kong. So how does the market really look like? A lot of people in the audience probably already know this very well. Just for those few probably have not followed this closely, this is what's really going on. The Hong Kong Biotech Index. So this is one of the most common cited ETF index. As you can see, at some point actually it's more than 100%. They get a little bit corrected in the past 2 days, but still almost double year to date in this first, I would say, almost 8 months of 2025. In comparison, as we all know, probably the audience better, it's XBI, which is a kind of a US biotech index, which has been largely flat. despite, as you know, SP 500 has been doing fairly well this year. So that's pretty much the background of today's discussion. Now it's my great pleasure to really introduce the panelists to the audience. And I would like, oh, sorry, one more thing. I jumped the script a little bit. It's just another example. Under the cover of this really red hot Hong Kong biotech stock capital market, it's a influx of IPOs and a follow-on equity offering. On the right column, you can see there's a lot of a very meaningful IPO, and there's also a lot of a really meaningful follow-on equity issuance. I'll just name probably point two. Henry raised 1.3 billion with their Hong Kong IPO. Innovent Biologics raised 550 million with their follow-on. And then if you look on the right, yeah, I just select a few of those IPO in the pipeline. Some of them actually already have gone IPO, but based on my best effort, as of today, it's about 30 biotech companies have filed or about to file IPO in Hong Kong Stock Exchange. So I hope that gave you overall picture why we are talking what we're talking today. Now, second time, it's my great pleasure to introduce our very prestigious speakers for today's webinar. I will probably do on the order on the screen. I will invite every speaker, spend probably up to 2 minutes, introduce yourself, and a few like a quick word about your opinion or your kind of a sentiment about the Hong Kong Stock Exchange in biotech sector. So I would like to invite Wei first. Please go ahead.
Thanks, Leon, for the invitation. It's my pleasure to join the meeting today. I am Wei Pan, the Chief Business Officer of Crimson Gateway. We are a company focusing on new co-incubation, leveraging China Discovery Engine to expedite global therapeutics development. I just came back from Evercore meeting, and it was a great feast for the international biotech community. About 50 plus biotech companies and pharma representing China's ecosystem and talking to more than 100 US and European VCs and biotech founders. And it was a fantastic event. So just, I think that's a great thing for the Hong Kong stock market as well. I'll stop here.
Yeah, fantastic. So Rachel, few words about you.
Yeah, thank you, Leon, and great pleasure to be here to share the perspective and exchange views with the colleagues and network. So I'm currently the partner of Atheris Capital, which is a newly set up VC life science focused VC fund here based in Hong Kong. And in the past 15 years, I was mainly focusing on life science and healthcare investment banking. Most recently with BAMO and previously JP Morgan and Credit Suisse. So happy to, having close follow up the capital markets here in Hong Kong, and happy to again, exchange the views here with the colleague, with the network.
We're probably going to skip Tony because he's busy with Ernie. I invite Min.
I'm actually here already.
Oh, okay. Tony, well, you're just in time. Please, Tony, go ahead.
All right. Yeah. Sorry, a few minutes late. Yeah. So, we today is probably the busiest day of our Hong Kong China earnings season. So I'm Tony Ran. I'm the head of Asia Healthcare Research at Macquarie, based in Hong Kong. That's where I'm calling from. So we as a team cover about 30 stocks in Hong Kong, China, and Japan. About 20 in Hong Kong, China, and 10 in Japan. I also help coordinate the research effort in Asia outside of Australia. So with colleagues in India, Korea, and Southeast Asia. So delighted to be here. I've been on the South side for about 10 years now, and I'm a recovering management consultant. And I think I see some colleagues online here as well. So delighted to be here.
Fantastic. So Min.
Hi. Hello, everyone. Thanks very much for the invite, Leon. Pleasure to be here. I'm a partner at Jones Day Hong Kong. Before relocating to Hong Kong in 2019, I was, with Scott in New York for 6 years. And back in New York, I actually worked on quite a few financings and securitizations involving pharmaceutical royalties. After relocating to Hong Kong, I think I worked with quite a few people in the big group on several high-profile Hong Kong IPOs, including some of the most high-profile 18A deals. So happy to be here today. Thanks.
All right, fantastic. So now the audience must realize why we invite all the speakers here. There's a really diverse range of experiences and also a lot of deep knowledge in the Hong Kong stock exchange biotech sectors. Without further ado, let's dive into the topic we want to discuss. So let me start sharing for the moment so people can see our speakers better. The first question is really open to the panel. What are the major factors driving the current biotech boom on the Hong Kong Stock Exchange? And I would invite each one of you share your opening remark. Probably on my screen where you want to get started.
Well, one of the biggest things is definitely the number of our licensing deals. And take the first quarter of this year, for example, there was like 41 deals, exceeding the entire first half of last year. And that the upfront during the first quarter was more than $900 million, exceeding the total private investment in the biotech sector in China. Nowadays, everyone knows that you need a major BD deal endorsement to go on the Hong Kong public market. And the ones who already had major deals, meaning that you have international commercialization potential, and more investors are interested in supporting the company. So that's definitely one of the biggest factors from my perspective.
Everyone feel free to chime in. It's really an opening remark. Tony, I think you muted.
Oh, sorry. Yeah, I would say a big factor is fund flow, right? So we have a lot of China to Hong Kong fund flow. We have monetary easing. China is supporting the market here in Hong Kong. A lot of the very high quality A-share champions, right? Henry, for example, are being encouraged to come to Hong Kong to seek funding. So we have rate cuts in Hong Kong, right? If you track the HIBOR, the Hong Kong interbank lending rates, right? It's been going down, right? Theoretically, Hong Kong should be tracking the US interest rates, but in this case, it's being divergent. So we have a lot of liquidity. We have a lot of quant funds. We have index funds flowing to Hong Kong. So I think that's a very big factor. Obviously, we talked about our licensing. We also have biosecure no longer being a factor. And I think you guys, I see a lot of people from the US. I mean, you guys know very well the perfect storm in the US biotech ecosystem, right? The overhang from the COVID days, when too many companies raised the money, right? And also remember, here in Hong Kong and China, we are recovering. We have just recovered from couple of horrible years in 2023 and 2024, where the market just did really poorly. Investors didn't want to touch this space at all during 2023 and 2024. So you add up all these factors. I think that's what we see in Hong Kong right now. And yeah, feel free to chime in, guys.
Yeah, I think fully agree with Wei and Tony. I think from a more fundamental approach point of view, especially over the past 3 years. As you can see, especially from the listed biotech, majority of the listed biotech valuation in Hong Kong was deeply undervalued. And given the booming or rising awareness of global BD out of China, the valuation of the Chinese biotechs has been adjusted and reflected with the kind of puring liquidity and the recovery of liquidity overall Hong Kong stock market. So if we compare the company successfully got listed or has been trading in Hong Kong Stock Exchange right now, their valuation they are actually benefit from the quick valuation adjustment for the good names, right? Leading names like Innovent, Akiso, and Colon, right? And those names all has been, I mean, the valuation has been adjusted, tripled or more than tripled. As of year to date, even, I mean, I think most of the valuation reflection was coming from the past 4 months even, right? And this is the benefits of the Hong Kong stock market. And when we look at the IPO pipelines or the private companies who is lining up for the IPO, who hasn't been able to enjoy the public funding or the recovery of the liquidity, their valuation or last round valuation is still relatively low compared to their peers. So there is a big gap between, I mean, in the overall China biotech universe between where the private company is valued at versus where the public market companies are trading at. So from that perspective, there are still a gap for the private high quality biotech companies out of China to get listed and reflect their value. And the universe, right, the ecosystem within this space, including investors, founders, and secondary investors, primary investors can all benefit from this trend.
Yeah, fantastic. Probably one more thing, I also want to get you guys a reaction. What do you think the role of China's kind of a rapid and cost-effective R&D play in this kind of a current biotech boom? Any comments?
I think in the last 2 years, the fact we've seen so many BD deal is because China is very capital efficient. Nowadays, especially in the field of oncology, it's well known that China, there's only like a third to a half of the US cost, but at least twice or even faster the speed for anything to go from scratch to phase 1. So that has definitely ignited a lot of interest from big pharma, especially they're experiencing patent cliff. Most of the pharma need late stage product that are ready for commercialization. So best in class from China has these kind of therapeutics are in every pharma is going after that shopping in China. So that has to do with that for sure.
Fantastic. I think all the panelists cover very well about the first topic. Also for the reminder for the people in the audience, if you have a question, you will see there's a Q&A button in the bottom of your screen. Please put your question over there. Because compliance issue, we will not take any anonymous question. Please include your name and your company, and then we're probably going to pick the most relevant questions by the end of our discussion. Okay, back to our questions. So the second topic I want to really invite you guys to cover is probably let me ask you, can you please identify the core drivers propelling biotech and listing and investment activities on Hong Kong Stock Exchange? So I guess, Lin, you want to take a start since you are a capital market lawyer?
Right, thanks. I guess I would just share from the regulatory perspective. The Hong Kong Stock Exchange previously was known for having a relatively lengthy vetting process compared with that with the US SEC. And probably realizing that the money pool for the 18A companies, dried up for the past 3 years until the at least the end of the third quarter last year, when the new CEO of the Hong Kong Stock Exchange, Bonnie Chan, took office last year. She vowed to to improve upon the vetting process, and people have seen the change since she took office. Based on our experience on the deals we have been working on, the Hong Kong Stock Exchange has significantly eased up, its vetting process, which is great news in light of the predictability of the deals, in particular the 18A deals, because many biotech companies, are facing sort of the redemption or the the stringent mechanism set forth in the shareholders agreement. So a relatively smoother vetting process would just allow them to get funding as quickly as possible. Yeah. And just one more thing to add. I think the so-called 18A boom this year, from my perspective, is also part of the capital markets boom in general, probably starting the end of the third quarter last year, resulting from the series of fiscal stimulus policies. I think, in particular, for those Asia companies in China, they, for some reason, I guess, for policy reasons, they lack access to in particular, their large controlling shareholders lack access to sort of refinance their equity holding in the company. So they the Hong Kong Stock Exchange or listing on the Hong Kong Stock Exchange has offered them a venue for that, since they have no sort of way of doing that from the CSRC, from the Asia Stock Exchange. Yeah.
Fantastic. Thank you for setting the stage. So I know we have investors, former bankers, and current sales analysts. Feel free to share your thoughts on this one.
Yeah, thank you, Ming, Ming and Leon. Maybe I just supplement a couple of comments. I think from a biotech, if you look at it from the issuer perspective, right, whoever wants to get the funding, and when they are selecting the quote-unquote potential capital markets to do, right now, Hong Kong capital markets, Hong Kong Stock Exchange is probably the only viable option for majority of the, biotech companies. A-share is, the regulation there, is what we probably all familiar with. It's not really the window or the regulation pathway itself. It's not really an option for the biotech companies as for now. It may change, right, subject to the regulators. But right now, it's not really a feasible option. And if we look at the offshore capital markets listing venues, and Leon has showed the index comparison at the very beginning. Of course, US is always a path or a option, but the US biotech universe itself hasn't been really performing very well, and a lot of US biotechs has been struggling to actually get their way up until IPO. I think that's the situation right now. It's not a regulation concern as for Asia, but then it is kind of capital markets concern. The liquidity or the IPO investor hasn't really fully recovered, hasn't been there yet. And Hong Kong, luckily enough, due to the stimulation comeback of liquidity, and there are some factor of reasons that there is a rotation of the investors' money, which coming from, other Asian market, right, also goes into Hong Kong because of the low valuation. The improved liquidity, etc. The reasons or the considerations we've discussed on the first question. It's the Hong Kong biotech company and the Hong Kong biotech capital markets has been opening up, right? We've seen couples of the successful listings this year for now, and from what I heard, those ones who is closely on the road, closely doing their NDRs and roadshows and approaching the listing are also doing fairly well. So for now, I think 3 months ago, we can't say it's a fully open up capital markets for biotech yet, or for ChinaBiotech yet. But for now, I think the confidence level of the high quality biotech companies to get successful listed has been increased, right? So yeah, I think that's also a very important factor that everybody is the reason why everybody is coming to Hong Kong. I think it's both way, right? We want, from stock exchange point of view, from capital markets point of view, we want more companies to come to Hong Kong, and from the company, the issuer point of view, this is their best option for now.
And like
Fantastic.
I said earlier, there are also some already established companies from China coming to Hong Kong, right? Hengrui, not just in our sector. I think Mindray is being tossed around as a company coming to raise capital in Hong Kong. We saw CATL, right? I mean, that's another big one. The EV battery maker. So by having these excellent companies to come to Hong Kong, that naturally boosts confidence, right? I mean, I think the problem we had a few years ago was that some of these companies should not have probably gone public, right? And so by having these great companies to come to Hong Kong, I mean, that naturally gives the market a sense of something to be excited about. Yeah. So.
Anything you want to add as well, Wei, as a kind of a former private investor?
Well, I definitely get a lot of requests from my friends in US and Europe, investors, and they're interested, even family funds, they're interested in investing in Hong Kong stock market because they see these biotech companies listed there were underappreciated before, and they still think there are more value, like increasing potential in the future. So I get asked for all the lists, who's got funding for IPO, how can we get into the pre-IPO round for a lot of friends. But they lack, unfortunately, that lack on the ground people to help them do diligence and make connections. But that has been changing recently with so many people visiting. So definitely, and there are also a lot of biotech companies ask us whether we can help them find an asset to increase the portfolio value or optimize a particular antibody, or some of their technology can come to China for early trials to accelerate the process. So there's been all sorts of potential for global partnership, and that probably their investors behind them also pay attention to the Hong Kong stock market. A lot of people have already participated to some degree. Yeah.
Well, you just gave me a perfect segue to the next question. I was about to ask, exactly the topic you just mentioned when you ended with. The question is, what the principal investor backing Hong Kong Stock Exchange listed biotech companies? I guess most of them from China. And what trends are you seeing in terms of domestic versus international participation? Anyone want to take a try first? Especially those who went to those bank-led events. Tony, you want to try? Who are your investor when you did your bus tour with the China Biotech? Tony, you muted.
Sorry. Yeah. Okay. Yeah, I actually only took one investor to see about 20 or so biotech companies in June. So we didn't really do a bus tour. It was a private bespoke tour for a client. So I would say from my vantage point, being a sell-side analyst in Hong Kong, I am seeing mostly Asian investors buying into the Hong Kong biotechs. Mostly money, like I said earlier, from China, southbound money from China. You can look up the percentage of fund flow into specific names, as well as the Hong Kong overall market from various different sources. Bloomberg Wind will provide that kind of data, and you can see that's been trending up. We see a lot of money from Hong Kong, Singapore as well participating in it. They did not start it, but they are participating as well. Some from the Middle East. I would say my European and American clients are a little bit more cautious. They actually ask more about I would say the second degree beneficiaries, like companies like the CDMOs, the CROs. They are more into this type of companies, not so much the biotech. So that's what I see.
Fantastic. So I know Wei and Rachel, you probably have gone to quite a few bank-led events. What's your overall observation over there? I'll cue Wei first. I know you just freshly came back from the Evercore event. What did you say over there?
Well, Umer hosted a wonderful event, and it was almost like 20 minutes fire chat, 10 minutes for each company. Then the next 10 minutes, Umer and a lot of people from the audience asked very sharp questions. One of the major things I heard is what's the differentiation between these assets, between these PD-1 VEGFs and these ADCs. But the overall sentiment was that the data from Chinese biotechs are not just copycats or fast follow. There are meaningful differentiations from quite a few companies. And also, besides this first wave of best-in-class fast follow pipelines and first-in-class or even more than incremental innovations are on the way. So we've definitely seen more interesting modalities like tissue-specific delivery of sRNAs and synthetic peptides, and a lot of innovation in vivo CAR-T in cell and gene therapy area with IIT trials. So these are all very exciting stuff from what I heard from Evercore friends. So they're looking at multiple ways to partner with China and invest in China. I've seen the analysts are like typing like crazy during those meetings and making notes and reporting to their bosses afterwards.
So Rachel, I know you are heavily embedded in the buy side as well. What do you have to say, especially your interaction with the Western investors?
Yeah, sure. Yeah, I think largely, in line with both Tony and Wei's observation. I think the additional points to share here is with this, like the recent booming or recovery of the Hong Kong biotech, stocks or the index, definitely it draws a lot of attention from US and European investors. Here we're referring to the secondary investors, right? I'm actually seeing more generalist investors, more of probably hedge funds than long onlys who can make their strategy quickly, are started to betting in the biotech. A lot of them are event driven and relatively short term. When I'm saying short term, it's really not day trading, but probably couple of months they build up the position for a couple of months. A lot of generalists came in. I think that actually helps on the momentum or the liquidity of a couple of besides the relatively blue cap in the biotech biopharma space. I think for some of the mid cap biotech stock price risen, it's partially of that was due to the hedge fund trading activities has been more active. I think that's one of the trend I've heard and I've observed from the universe here. And of course, back to the long only, within a circle where we've been kind of speaking or following up this trend. I think the long only would be, similar as Tony's observation, would it be relatively more conservative, especially for the US and the Europe long only. But the fact is this type of recovery, this faster recovery, right, within the 4 months or 6 months of time, definitely draws attention, and the people are started to putting more effort into this field and evaluating stock by stock, whether the valuation is a right valuation, whether this is a short-term booming, or whether this is more sustainable, and whether this is a trend for them to spend more time or come back. I think the other consideration is also tied to, besides the biotech specific considerations, one the other consideration for this long only to make a move is also tied to their China strategy and their understanding of the Hong Kong stock exchange liquidity or dynamics, right? Because they are investing in Hong Kong, which has a different feature or dynamics versus NASDAQ. So I think that's also one of the other non kind of sector specific consideration they are having while evaluating whether to come back or to jump in this trend overall. And during the past 2 days, there is a value adjustment, I think, which is a good thing instead of a bad thing, right? It's always good to have adjustment, and when there is adjustment, it's an opportunity to allow more investors or value-driven investors to coming in, and to make it the overall trend more sustainable down the road.
Yeah, fantastic. Again, you already started answering my next question. Was about to invite the whole panel to comment on the Western investors' participation, and you already bring the really good points already, right? So like the generalists are coming in, and this probably can create a deeper investor pool, and also the past few days there's a correction, probably create a much more attractive entry point, right, for this long-only investors. So before I open to the whole panel, another interesting observation, at least when I look at the attending companies list from Evercore event, I saw all the major royalty investors are there. So that's quite interesting. And then shortly after, Royalty Pharma just did a deal with the Beijing, right? It's almost like a $1 billion cash. Despite the asset actually was not initially developed by Beijing, but at least, when China originated the company, pull off a really big royalty deal. So use that as a kind of a starter. I really want to open the discussion to the panel or other panelists. What's your view? What's your sentiment when you interact with those Western investors, which I think still probably have a deepest pocket? So if anything you have observed, please share. So where you want to start? I know you interact with a lot of specialists, right? So you're representing, the community of specialists. What do you have seen? Those from the West.
Well, yeah, the Western investors, including our investors and advisors, they're in two leagues. One of them, one league is very interested in late stage, meaningful, differentiated drugs from China, and they think either the royalty or merger and acquisition, especially asset acquisition, represent like huge value for them and great opportunity. And they are the other league. They said, well, we're more interested in first-in-class innovations from China, the next generation. So they want introduction to the 35 to 40-year-old drug developers in China or the academic scientists. They're like, where are the best Chinese postdocs? Used to be trained at U.S. institutions, and they come back, and we want to get to know these people and give them money and incubate the next generation of drugs. So I would say most people take a very positive approach of China right now, thinking China could be part of the solution for the huge unmet medical needs where the patients actually need more accessible and affordable drugs in the future to expedite the entire global development. And so China could be part of the solution instead of being viewed as a competitor or sometimes a threat or a fast follow. In the past, I think the sentiment is gradually changing. Some people change it faster than the others, but in general, there's a more positive views of how to partner with China right now. One of the friends that made a comment that they said they try to work harder on a particular target to optimize it. Then they realize, why don't we just find some Chinese friends who can optimize it faster and take advantage of the China speed in therapeutic engineering, and think they did it very well so far.
Any other comments about your what you have heard, of the West investors' perspective with the China biotech? Probably I give a hint, just give everyone a little bit of teaser. I personally heard a lot of West investors really kind of use BD events or future BD events as a driver. So I say, Rachel, you are nodding. Probably you have something to say.
Yeah, definitely. I think for as for our, I mean, as introduced, we are a new fund. As for our LPs, right? So basically, they are non-Chinese and they are not very much familiar, or they were not much familiar or plugged into the China Biotech universe. I think this is something new to them. I think one of the fundamental thesis, well, kind of observing the China Biotech actually has gone through the booming since the introduction of biotech, sorry, Chapter 18A a few couple of years ago, and then it's really hit the button, like it really hit the button. That's quite harsh for the past 3 years, and now coming back, right? I think majority of the private investors realized the fact that number one, they cannot really purely rely on the capital markets as the only exit path. Previously, people are hoping Nasdaq is shall be a kind of regular channel, despite of it goes up and down. It's just a timing issue. And Hong Kong, when the stock market are good, it actually offers significant premium versus Nasdaq. But that's like the last decade story, right? Right now, we are moving into a new age that where, I mean, investors are viewing this BD or the increasing number of BD transactions to offer as a potential, not a full exit path if it's not a new co-investment, but a significant event for the potential DPS. And this is, I think, as one Wei has said, I think people are in generally in line or aligned with the view that, I mean, China's innovation or the progress of China's biotech innovation is a one way train. It's just gonna be, I mean, getting better and better. It's not going to go back. So the play or the important role China biotech or the innovation strength, the muscle has been playing into the global life science industry. It's just there, it's pretty much stable, right? I think the other thing which is good is I think people within the biotech universe has also been through the drama of what the Biosecure Act has impacted the large CROs or CDMOs in the past 18 months. Right now, given a new government, new policy, it has been, I mean, the overhang has been removed, but whether, I mean, the other question is if any sector is heavily rely on the cross-border transactions, will there be any, I mean, geopolitics impact, right? I think luckily enough, despite if there are noises, not loud noises, but some noises or increase here and there. I mean, on this cross-border BD, but cross-border BD itself, it's an out licensing transaction or self assets itself doesn't really generate or arise or touch upon a very sensitive geopolitics topic. It's unlike the CROs or CDMOs, right? It's actually quite sense driven. It's normal, it's everywhere, it's pre-exist in the global life science industry. It's just something China has been picking up and has been doing super well in the past 12 months or so. Right. So I think from that perspective, especially from private or even VC investors' point of view, it provides a lot of comfort. There are a different channel of getting return on the BD transactions. And given the how active those, I mean, ecosystem players, including we yourself as a newco player and those MNCs or even tier 2 pharmas, and I think 1 or 2 months ago we saw one or two China kind of big pharma BD transactions within China, like a BD transactions, right? So people are recognizing, okay, this is essentially a way to do it. So it provides a lot of comfort on the private investors end. What I'm hearing is we are not, I mean, anywhere close to the most risky betters, right? What I've been observing is a lot of capital actually came in to incubate the biotech companies. I think the founders or the clinical team with a proven track record will be very popular in this universe for a few years. That people are hunting for the good management team, good scientists to start new companies or start new assets trail after they've done their current one. And there are also closer collaborations with the universities, which is very common and mature in the Western world, but not as mature in China. But then right now it draws more attention because people want the best science. And if you are an incubator, you spend least of the money, but you get the highest return.
Right. I'll chime in with my 2 cents. At the risk of making this interesting discussion a little bit less interesting, I would say my observation is that a good chunk of investors in the 18A space remains to be those local government-owned science parks or healthcare funds. They tend to be more generous, but at the same time to so-called protect state assets, they wanted some side deal done with the issuer oftentimes. So, and also they so it's sort of 2 sides of a coin, and I think that's still been an issue that's been lingering around during the book building process, and yeah, that's just my observation.
Any more comments from the panel before we move to the last, probably most anticipated or interesting topic? All right, so actually quite a few audience already asked us, can we compare the US biotech performance and the Hong Kong biotech performance? I guess that's what we're gonna discuss as our last major topic. So really is how might the Hong Kong biotech boom affect the US biotech market, right? So for people who just dialed in, didn't know what the background really is, let me just flash this chart one more time. Like Rachel said, even after the correction in the past 3 days, the Hong Kong biotech index is still almost double, right? And at some point it was like had risen more than 100%, and corrected more than 10% in the past 3 days. But still, compared to the US, which is largely flat. So that's a world we are living right now. So the question really is how the rise of, let's say, Hong Kong biotech capital market, which largely driven by China biotech, impact the US biotech. So it's open question. Anyone want to take a swing at first?
Well, the way I think about it is that I think the analogy is when China joined the World Trade Organization, right? Back then, I recall the analogy was like throwing an elephant into a swimming pool. And you all have a little bit of ripple, right? And I think it's the same analogy here. You have a pretty large system being integrated into the rest of the world, right? I mean, I believe our sector is always more integrated globally compared to many other sectors, right? So that's how I think about it. It's throwing an elephant into a pool. So.
That's a very good metaphor. Thank you. Any other comments? I'm pretty sure there's a lot of you want to say. So probably, I know there's too many topics, too many angles you may want to start, so you don't know where to start. One angle I have heard during our preparation is, we were discussing that some of the China biotech probably become specialty CRO, right? So if any of you can comment that, feel free. I think that's a good kind of a concept, especially for audience from the West.
Well, I wouldn't call them specialty CROs. I think these are great platform company and continue to innovate. For example, for ADCs, there are people working on the next generation linker payload technology, bispecific, dual payload. etc. And for my oncology friends in US and Europe, they realize if they have a new target or if they have a pair of targets that make sense together for a particular oncology indication, they will want to partner with China to make a molecule in a cost-effective way and probably run some of the initial proof of concept trials in China. So that's, I would say, the fact that the way Hong Kong stock market is performing for the biotech and the China biotech has got to the status as of now means that I think some of the smart US companies going to take more proactive approach to leverage China for a win-win situation. And the ultimate buyer is the pharma, because if some of them, let's see, like if they don't take good advantage of these platforms in China, then their competitors in US may expedite their internal development by partnership. So ultimately, whoever gets bought by the pharma is a winner, right? So I think that's completely different way of how we do drug these days, especially if certain pipeline can be optimized by the China speed or clinical resources. So that's definitely affecting US biotech market. But I would say there's still so much novel biology and clinical know-how, especially late stage clinical development expertise in US, and strategic talent, how to make a differentiated pipeline, taking advantage of the growing technology platforms in China. I think that a lot of Chinese biotechs also reach out to Western consultants, advisors to help them on that. So I would say whoever can strike a win-win deal is a winner in the future for both capital market.
Yeah, great comments. Probably I share a quick observation from my end. I guess the China Biotech, one of the major events people start paying attention to China Biotech is really the rise of a Summit, right? Summit Therapeutics. And if you look at Summit, I think that's a good example of how the US biotech collaborate with the China Biotech, right? So until probably 6 months ago, Summit have not published any data, right, from their own development. It's all based on data come from Akeso, which was sufficient to support them at some point almost a $20 billion market cap. And today, I think both of them are doing really well. We were just discussing before they started. Akeso, I think, a market cap was also around approaching $20 billion as well, right? Even with some correction. So that's a perfect example. I think both companies are doing really, really well, becoming one of the largest in their own sector, do this intensive collaboration. Another recent example, I think, is between Calera and Hengrui, right? When Hengrui announced their phase 3 obesity trial result, which, by the way, looked fantastic with a little bit wrinkle. And, the Calera CEO is really, really talked up about it. I'm pretty sure that add a lot of value for the Calera as a company. So that's another thing, right? So they really leverage Chinese fast and efficient R&D. In this case, actually, it's the late stage clinical development. I remember there was one comment from Wumer during his summary of the Evercore event. He said one China biotech CEO told him they recruit 600 patients for phase 3. I don't know whether phase 3 or phase 2 obesity trial in 6 weeks, right? So please think about it. That kind of efficiency is quite amazing. And if that asset has some collaborator from the US biotech or biopharma space, that's tremendous value creation. So I personally think this is really, Wei said, if you're a smart player, you know how to leverage China's a rapid and cost-effective R&D. I would say until phase 2, that have a clear advantage, that would create a tremendous value for the Western biotech. So I personally more in the camp of China biotech, more like an opportunity for US biotech at least. But again, that's my opinion. Any other different opinion or additional color, please feel free to chime in.
And you should also look at the large pharma side, right? Obviously, I think this audience is mostly biotech, right? But you look at the large pharma, right? Companies like AstraZeneca, Merck, GSK, the German Merck, they've they've done really well, right? Working with the Chinese companies, right? So yeah, I think about Johnson and Johnson's Carvykti, right? So
Right.
came from China, right? So yeah,
Right.
these companies have done really well on the back of Chinese biotechs. Yeah.
Yeah.
My view is that China Biotech is here to stay, right? It is a core part of the global value chain. They will be contributing assets to the global pharmaceutical industry probably for a long time. In the preparation, we talked about the 130-year history of the industry, right? Just as a refresher. So our industry, as we know it, really started in 1897 with Bayer about 130 years ago. They created the aspirin in 1897. So that's the start of our modern pharmaceutical industry. And during the wars, right, the American government, the European and American government confiscated a lot of German assets. So Merck was expropriated in 1917, and then Schering AG was took over by the American government in 1941. And then the European companies carried on. One company you guys may have heard of is called IG Farben. It subsequently became Bayer, Sanofi, AGFA, and AGFA, and BASF, right? So the European company carried along. And then in Asia, I covered Japanese companies. In the 1980s, the Japanese company really contributed a lot of assets into the global clinical pipeline. The statins, a bunch of antibiotics. The Japanese companies really contributed in the 1980s, right? And I think by now, China out-licensing really started in the 2010s. In my recollection, HUTCHMED was the first one who licensed the drug to AstraZeneca in 2010. And then Beijing did a bunch in 2013. And then Leon, like we said, after 2024, ASCO, right, was the Akeso Summit data, the floodgate opens, right? So, I mean, this is all good for patients, right? This is all good for patients. This is good for the entire ecosystem. So I think China right now is at a stage where it's maturing enough to be a very valuable contributor to the global pipeline.
Oh, fantastic! Thank you.
Obviously, there are always going to be winners and losers, right? Every time things change, someone moved someone's cheese, but that's how I think about it. And if I think about the development of these countries, right? The Europeans, the Americans, the Japanese, and the Chinese. Typically, it's a combination of industrial policy, typically a combined private and public investments, and a pool of talent. This is what you need for the sector to thrive. And I think we've seen that in Europe, we've seen that in the US, we've seen that in Japan, and now in China as well. So.
Yeah, fantastic. I think that's a perfect conclusion of our question list. But before we take the question, which I have quite a few, I would invite every panelist to give you, let's say, use your crystal ball to predict how this Hong Kong Stock Exchange biotech boom gonna continue. Whether it's gonna go up, go down. What's your view? So probably again start with where we the order on my screen. I'll start with the Wei.
I think it's at a high point right now, personally. But I think some of the companies will continue to grow, who are able to create differentiated pipeline in a meaningful way. We can't have 20 companies working on the same target by specific combos. And also among these companies who can continue to reach partnership deals with pharma or big VCs overseas will continue to win because they will have the resources to innovate even first in class in the future. So I'm optimistic, but in a cautious way. I think the competition is getting more intense.
Great. What do you think, Rachel?
I think first and foremost, I think the index we saw are covered by a group of quote unquote blue chip biopharmas or big pharmas and the CROs, right? It's a representative, but it's not every single one of the biotech, right? So I think from my perspective, it's still, really company by company and fundamental driven. Biotech, each company does different things, has different pipelines. There might be, if we look at the valuation or the fundamentals, there might be, views or perspective from, for certain players that are the valuation are relatively high already, right? People or have debates. We have like off table debates, which is private information, probably not too appropriate to share here. But I think people have debates on some of the kind of valuation driven players. But for a lot of, what I want to say is the emphasis is really on a lot of other biotech players that every one of each one of them has an individual unique pipeline and the potential, and some of them, according to what I know, are also doing some progressing or are conducting certain BD deals, right? I think it's really event driven and it's really pipeline driven and asset driven. As I mentioned, I think a lot of, it's a 20/80 rule, right? 20% of the large biopharmas or large healthcare companies are driving the overall index right now. However, there are 80 of the pool, which individual there shares a lot of unique characteristics of each companies, and any of the companies could become tomorrow winner. And there are upcoming ones. And I still see, if we really look at the company by company basis, I can still see a lot of companies are undervalued. Some are deeply undervalued. On the stock exchange, right? And there are upcoming ones, which, as I mentioned at the very beginning, there is a gap between the private capital markets and the public markets right now. Result from the kind of lack of funding from the previous 3 years, right? So there are still value gap to be bridged, and there are still opportunities for the secondary investors to actually make money from the IPO or the newly listed companies, which are not selling extremely expensive. And when those companies deliver their milestone, there are still opportunities for the secondary investors or public investors to make money upon those companies, right? So I would say it's really still a wide open opportunity for investors to come into the China biotech space in Hong Kong. But whether the index represents everything or whether the index itself reaches the highest point, I think, everybody has a different view.
Great. What do you think, Tony?
Well, like Rachel said, after surviving the last 3 years, I think you have to be an optimist to be on the sell side, right? After the bloodshed over the last 3 years. I'm overall on balance positive. Obviously, not every company will succeed. Some of them will have setbacks, right? It's science they are dealing with, right? Even fast followers would have to take some risks, right? Biology risk and your design risks, right? So some of them want to make it, but I think I'm seeing a much better crop of company compared to when I started the industry 9 years ago. It's just way better, even compared to 5 years ago during the last Hong Kong boom. The current crop is much better. So it wouldn't be a smooth, straight up path, but I think on balance, I'm quite positive.
Fantastic. So, any legal challenge? I'm just kidding. What's your
Right.
closing mark?
Yeah, so I think from the regulatory perspective, I think until and unless the CSRC has decided to reopen the submission from the biotech companies for the star board, so-called 科创板, the trajectory probably would not change that much. So I guess that's at least for the past 8 months. That's the the trend we have seen, and let's see how it plays out, by the central government. Yeah.
All right. I guess we quickly went through all the questions. I apologize. We're going to run over probably 5 more minutes because there's a lot of good questions. We really want to give the chance for the panelists to respond. I'm going to pick probably 4 of them. So, please try to be as brief as possible. And the first question is from Tom Hancock from the Gaveco Technology. And he has 2 questions. I count into one. His first question, what are the main sources of Chinese companies' faster speed in the preclinical phase? And could the speed gap with the US, Europe increase in the future, or it is more likely to narrow? It's really the core. What's the R&D efficiency source of a China biotech compared to the US, whether it's going to change in the future? And not just US, also Europe.
I'll take this one. I think China has too many STEM majors. When we were little, then we were educated. If you learn math, physics, and chemistry, then you can go around the world, right? So that has not changed. There are continue to be even better STEM majors. They're either in tech or some of them are interested in biotech. And these people often, once they get their PhD training, they can change function, but they don't change industry. So they will continue to work hard in this industry. So I would say that's probably the fundamental reason why there's this China speed in biotech. And it's accumulation of last 20 years STEM majors. Yeah, so I wouldn't, if I were my US and European friends, they don't bother compete with the China speed because their kids are not taken care of by grandparents. So they have to, they can't work 14 hours a day. So, but they're thinking about leveraging the China speed and work on things like synergistically. They're great, fantastic biologists, but they want to leverage China speed to make a molecule faster. So I think that's a smart approach rather than closing the gap. But in terms of regulatory reform, I believe there are people trying to move for flexible clinical development. So patients can get more recruited more easily in the clinics overseas. And that will probably see some improvement in that area, hopefully.
All right, next question is from Ertaza. So he really asked, he would love to learn how the Hong Kong Stock Exchange compared with other places like Singapore, Taipei, and Shanghai. What is pushing Chinese biotech to Hong Kong Stock Exchange and away from other markets? I think, we already addressed that. We can skip this one. And the next question from Martin Sullivan. It's really about the contrast between the Hong Kong and the US. The US stock exchange has always been attractive for mainland China and Asian biopharma companies to list for access to established investment firm. With the current geopolitical tension, do you believe that the Hong Kong Stock Exchange will be the main benefactor, or will other stock exchange like London Stock Exchange see increased interest?
Yeah, maybe I take this one first. I think yes, US market is probably the first choice if the market is kind of doing well for all China biotechs, and with the geopolitics tension, it's getting a little bit more challenging. But I think it's less of geopolitics, as I mentioned before. It's still more capital markets driven. I think number 2 is whether, Hong Kong is the one. Hong Kong is a home market. Hong Kong has the world second largest liquidity overall, right? Hong Kong Stock Exchange itself. So it's still, and it's also the home market or top 3. It depends on the timing we are checking the liquidity. And China is closest to Hong Kong, and it's really the home market. There are, LSE or other board throughout the decades, right? For any China issuers are not obvious. Right, investors, it's not only applies to the life science industry, it applies essentially for all the industries. I think Tony and Ming can also chime in as well. It's just not as obvious. Investors are not as familiar, and the people are more familiar or used to a more European driven or European continent driven or with selective US culture flavor. So it's not really a quote unquote home market or even a world open market for any type of China issuers. For now, there has been selective issuers, but it's just not as common. As long as, so the conclusion here is really, so as long as Hong Kong market stock change is still encouraging, which they have been doing a lot of effort to, I mean, increase their efficiency and attract the improved liquidity and also attract the investors and also attract the issuers, right? At the same time, they've been doing a lot of work to essentially promote the stock change itself. We believe it is still the kind of go-to stock change for any of the biotech issuers out of China, or even some of the Asia, more pan-Asia biotechs are looking at China right now. Are looking at Hong Kong Stock Exchange right now.
I think they tried, right? I think some people tried GDRs, right? The European exchanges, right? And they decided to come back to Hong Kong.
Yeah.
Yeah. So
Go ahead.
the other stock exchanges, right? Singapore, the Singapore Stock Exchange has been working really hard, trying to get the Chinese companies to list there, but the liquidity is just not very good. So the Singapore Stock Exchange, they send representatives, a lot of representatives, doing trips throughout China, and every season actually, and they even have this incentive policy, trying to get the senior executives or founders, of the companies that are interested in doing listing there, so-called the immigration incentive policy, trying to sort of incentivize the listing there. But so far, we have not seen a big boom, over there, at least not yet. The European markets, as Tony mentioned, before March 2023, there was a lot of Asia companies trying to do GDRs, either in Switzerland, the Swiss Stock Exchange, or in London or in Frankfurt. But the CSRC just decided to shut the door down in March 2023. After that, basically the venue to list in Europe, in either London, Frankfurt, or Switzerland, just the door is forever closed, at least for now. So I guess Hong Kong remains to be a, if not only, but the most ideal place for fundraising, at least for the foreseeable future, from my perspective.
Great. So there's two more questions. Let's make it quick. The next question is from Big Ian Bista. I believe he's a BD from a US biotech Invada. He has two questions, but I can only pick one. It's really, given the rise of China biotech innovation, instead of upping the game and competing, certain corners of the US biotech ecosystem are making xenophobia mainstream, and there are voices demanding barriers to out licensing from China. What do you think of this? Would this be, kind of something real threat or concern for the US biotech or China biotech?
Yeah, maybe I'll get started and other people can chime in. I think there are many competing interests, right? We talked about this before, right? The large pharmaceutical companies definitely benefit from licensing. And there will certainly be some people who, even within the biotech community, there will be some people who benefit from working with the Chinese, and there are some people who are on the losing end as well. So I think we will hear competing interests there. It's hard to see which party will prevail, which side will prevail. But I always believe licensing out a drug is like licensing out a recipe. It's like selling someone a recipe. There's no back door, right? There's no I think you hear about the NVIDIA chips into China, right? I mean, the debate about whether they have backdoor security risks and so forth. I mean, selling a recipe doesn't involve any securities risk, right? I mean, the licensee can decide what to do with that recipe, how to make it, how to develop it, right? So I'm not sure how that can be done, banning Chinese licensing. What if a biotech company is founded by a Chinese American and has businesses both in US and China? I mean, how do you define it, right? So, yeah, I mean, it's my view is that the people will try, but I don't think it will be an easy outcome. So.
Yeah, maybe I'll quickly chime in here. So yeah, I think I agree with Tony. Competition will always be there, but just take a step back and think about the scenario, right? So over the past 12 months, during the booming of all licensing BD transactions, and one big reason for the willingness or even the eagerness of the Chinese biotech company to pursue a BD or out licensing transaction is because of the unfavorable funding environment here in China. And with this booming of or rebounding of, Hong Kong stock market, it will get improved, right? It's not fully recovered, but it's getting improved, and more funding, private funding and public funding are coming back. If for example, if in the case that China biotech or licensing is banned, it will only encourage the China biotech company, even the government, to step in to promote sufficient funding to fund these assets, and it can be also bought by Chinese big pharma. Then it goes into head-to-head competition with US. So it creates even worse competition by banning it. Right now, I would think both the MNCs and even second-tier biopharmas or some biotechs looking for options to leverage the innovations out of China at a cheaper cost. It's a way that China biotechs are giving advantage to them. So it's a smart move to do that instead of banning it. It creates only bigger or stronger competition.
You remember, in licensing deals, it's always the licensee who benefits the most, right? The licensor gets something for their fair day of labor, but it's the licensee who really benefits, right?
Fantastic. So I guess the last question you guys already answered it. So this is from Di Yang. I believe he's set up a new code. Do you think if the VC market for private biotech will open up? So your quick answer.
Yeah, it's a getting there. I mean, if the Hong Kong stock market's recovery can sustain, right? I think the big topics right now on the secondary market or public market is whether this trend can sustain. It includes biotech and the overall market. If this kind of recovery can be sustainable, and last into the future years, the private market will be benefits. You will see the changes and the more funding and more LPs willing to invest into the VC or private markets in the coming. There will be a time lag, usually 6 to 12 months, but it really subject to the public market situation. Yeah, I already see some recovery, but not full. It's still tough here in China. Yeah.
Well, I have seen recovery in both China and US within a small circle. Within China, the biotechs can continue to innovate in a more meaningful way in the future, solving the bottleneck of existing technologies will get funded. And in US, there are companies often incubated by creative and visionary thinkers, the ones who can execute better, the serial entrepreneurs, they still get funded very well. So I would say between these two worlds, the winners will be the ones who can continue to deliver differentiated pipeline with cheaper and faster speed. So yeah, and for these entrepreneurs. They will always get funded.
Fantastic. I think that's the perfect conclusion of our today's discussion. And before we, leave the webinar, I also want to remind people we have 3 more webinars on in the pipeline. And we are looking for sponsor as a nonprofit. If you are interested, there's an email in the bottom of the screen. And for today, the webinar, the replay gonna be uploaded to our YouTube channel, so you can scan the QR code to look for that. And also you can subscribe to our newsletter, which gonna include the replay as well as summary here. So this is kind of a overview of what we do and the iSuite community. With that being said, thank you everyone, Wei, Rachel, Tony, and Min for the fantastic discussion today. We apologize for the delay, but I guess because there's so much interest, we run over time. And thank you very much. And we will see you again in a month. And everyone have a great day.
Great. Thank you. It was great fun.
Bye-bye.
Thank you.
you.
Take care.
Thank you, everyone.
Thank you.